to the Drive at 5 on intellectualradio.com/iHeart radio station. I'm your host, Ron. We have a terrific show planned for you today. Don't forget to stay tuned to intellectualradio.com/iHeart radio station for Warriors Talk right after the Drive at 5 with my girl, Rochelle. Tonight, my guests, they represent insurance. And we're going to have a heavy conversation regarding insurance because there is some misinformation that's been going on out there. And we want to know what is true, what is false, what can you do, and how can you do it. So, to introduce the introductions, please give intellectualradio.com/iHeart radio station your background, your first and your last name.
Hi, my name is Jamica Davis, and I am the president of Legacy Creation Solutions. I sell life insurance, health insurance, and I'm also a paralegal. And I've been in Chicago area for 17 years now.
Hey everyone, my name is Cedrick Harding, homegrown from the south side of Chicago. I'm an Army combat veteran, 23 years. I retired last year in 2023. I'm a human resources professional in the military, and now I've transitioned over to the wealth side in the insurance industry as a broker. I am the founder of LegacySmart Group, and that's what we're here today, just to talk about all the great things that this industry, that these things can do for you.
All right, let's get right to it. The specialty of insurance, to me, and this is just me, I go online and they say, no, don't do a trust. Do it this way. And somebody says, do a beneficiary. That's what they say. Don't do a trust, do a beneficiary. Then some people say, don't do a beneficiary, do a trust. And we don't know what to do when it comes to insuring your home and you're leaving your son, your daughter a legacy. And 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 we don't want to go through the rigmarole of a probate. So what is the true answer in regards to if I want to leave a will and trust to my son or my daughter or any family member? It could be a house, a car, or whatever. And they're saying, okay, a trust. Don't do a trust. Okay, what about a will? Don't do a will. What about a beneficiary? Don't do that. What is the true answer? Starting with you.
Well, the true answer, and I'm going to tag team with my partner Jamica here, is the first thing you got to do is sit down with a real person and have a discussion so you can line everything up. Right now, you have a will, you have a trust, and you have a beneficiary. Right, and there's one that takes the priority over the other. Right, so I want to pass it to you, Jamaica, so you can. She's the expert on this one.
Okay, so you asked the complex questions, so I'm going to break it up because you talked about wills, which a lot of companies, such as insurance companies, lawyers, as well as banks, they all drive and say, "Hey, you can fill out, you can get a free will." So, what people don't understand is yes, a will is free. However, it's free for you to sit down and write it out, but then you still have to go, and when you pass away, your family members have to go and open up an estate. And when they go to the probate court to open up the estate, probate is the only court that you have to have an attorney. And an attorney can cost anywhere from $3,500 to $5,000 just to start your probate. And then there's a waiting period in probate where your debtors has to be notified, and then they can come and say, "Hey, you owe this debt," and then the debtors are the first ones to get paid off. And then after the debtors get paid off, then your family members get the rest of the money. So you don't really want to go that route. I would recommend or suggest a trust. So, in a trust is specifically for you, and it's tailor made for what you want for your family members, your heirs, and your children. So once you do your trust, it specifies everything that you want in there, who you want your home to go to, how you want your trust to be funded. And so with my I have a trust, and in my trust what I did was when I pass away, my life insurance policy will be funded to my trust, and then it will go to the it will be invested into the S&P 500, and then my children will get the interest. So that's how mine is funded, and then that's creating generational wealth. So um your trust is specifically and tailor made to you and your needs, and you can even from your grave you're dictating how you want your money to be um sent out to your loved ones. And so from that, what I would recommend is you get a estate plan, and then a estate plan is for everything. It has your doable power of attorney, your information for your home, and then you want to put your home in the name of your trust. So when you put your home in the name of your trust, it when you pass away and you owe a mortgage or anything on the house, it will not be subject to liens and things of that nature. So if you put everything, your assets, all your financial accounts in the name of your trust, you will not owe your debt. So you only owe debt when things are in your name with your social security number. So
So
that's it.
let's say you pass it down to a family member or a loved one,
Pass what down?
a house, a car, or whatever. What will happen? Because they say you will go to probate court no matter what.
So that's not true. So with the trust, it guarantees that you would not go to probate court because your trust agreement is only for you and your family members or whoever. I would say I would give it to or let my successor trustee and the beneficiaries know where the trust agreement is at. You don't have to disclose your trust agreement to anyone. So what you will take to your financial institutions and um like your 401ks and your life insurance policy, show them your certificate of trust, and that is what will be on all of your documents. So you will not have to pay any debt back, and make sure that everything is in the name of your trust name and not a person's name, because we all know people die. So when people die, it goes to someone else, to someone else, to someone else. A trust never dies.
Let's say, for example, someone dies
Hmm.
and,
Someone like who? The person that did the trust, the trustee, or who?
well, let's say the owner of the house,
Okay.
they had a trust, but it wasn't specific enough to lay down the gauntlet of what's who, what, when, where, and why. What a person's supposed to do.
So, first of all, it should come to Legacy Creation Solutions. However, it seems like that the scenario that you were talking about, someone would have done a general trust. So general trust is for like everybody. It's general information. It's not tailor made to a specific person or to your family. So when it's like that, then yes, there's all type of loopholes that is in a trust.
Can you name
So
a couple
yeah,
of
I'm
the?
about to right now.
Yeah.
So today I was on a Zoom call with one of my colleagues, and so we were going over. She went online, and we went on a website, and so we did a general trust estate planning, and in that trust estate planning, it was on there that. They asked all the questions, the same questions that our company asked regarding your financial information, 401ks, life insurance policies, um, it also asks for bank account information and insurance information, like health insurance information. So then we kept on reading all the fine print, and then it started talking about the information for the spin down of your Medicare and your Medicaid and stuff like that. So, and I was like, well, why are they asking about that? That's irrelevant and stuff like that. Says, well, this must be like a general trust agreement that still has to go to probate. So we kept on reading, and then we found out that yes, it stated that they needed your social security number for that trust. You have to use your social security number. I'm like, well, if you use your social security number, it defeats the purpose because you have to go to probate court, and then after probate court, you giving them your social security number, which is still in the name of the person. So your trust is in the name of the person, and with your social security number instead of a trust identification number. So at our company, we do a trust identification number, which is a totally separate number from your social security number. And then we kept on reading. And so once you go to the probate court, you're not you're not getting generational wealth. You're actually going to be in more debt or get less money because if I'm going to use my social security number and then all the debtors are going to come and say, hey, you owe this amount of money. So if you have $100,000 and then you $75,000 in debt because of your mortgage and credit cards, whatever else, insurance, then you're only coming out with $25,000. If you put everything in the name of your trust has all your assets in there. And so you're going to get your $100,000 or fund it the way that you want to, not taking out any debt because your social security number is not tied to your trust information. Your trust identification number is tied to it.
What about wills?
Can I hit
Oh,
on
go ahead.
something real
Okay, go
quick?
ahead.
I want to add something to your point, a question you asked me earlier. So in the order that how I see this is, you have the trust is the highest one, the one that you want. The next one to focus on is the beneficiary. Then you have the will. Now I'm gonna put this in my own words. The will to me is almost like a request. I'm asking that you do these things. But when you have a beneficiary, if you have the beneficiary on that bank account, the
Mhm.
beneficiary on that life insurance policy, that is going to trump the will, right? And what's going to trump the beneficiary? The trust. So that's the order. That those are the ways that you, uh, in my own
Even
words, to
if it's
level
a
up.
basic
So you never
trip.
want, so you want to be intentional with your trust because this is something that from the grave that it's something you're instructing people to do. So your beneficiaries, you never want a person on anything of assets or anything as a person and your beneficiary as a beneficiary. You want your trust to be your beneficiary. You want to put everything in the name of your trust. The trust is also a person because it has a TIN number. So think of it like that. I want it in my trust. A trust never dies. A person dies. So when you pass away, your trust will always be there, always, forever, evermore be there. But people die all the time. Even if you left it to your son, your daughter, their kids, everybody is passing away. Yeah,
Beneficiaries pass away.
beneficiaries pass away. Your trust will never pass away. It'll always be
But
there. And
who will it go to if it never dies?
whoever you instruct. So your successor trustees are the ones that are supposed to um, follow whatever instructions the trustee says to do. So the successor, you have to believe that they're going to do or trust that they're going to do whatever it is that you say that they're going to do. So don't just have anybody being your successor trustee. So you have to say, hey, this is the successor trustee, and these are the steps that I want you to do. So for instance, if you have a son or a daughter, each year you want them to have $5,000 on a certain day, then your successor trustee, if they're minors, are supposed to make sure that that happens. Now, once they get older, grown, 21 years old, you can put in your trust. When they get 21, they can do as they want to do. However, I mean, you don't know when you're going to pass. So definitely have something stating if you pass and they're still minors that you want XYZ to happen. But put everything in the name of your trust and not people.
Oh,
We talked about homes.
mhm.
Mhm.
What about cars? What about heirlooms? What about jewelry? Is that the same thing? The steps that you
You put
have
that
to take?
put that in your will. So whoever you want your clothes, your jewelry to go to, stuff like that. And then the Secretary of State has their own beneficiary form for your cars. And then if you have less than $100,000, you can file for a small estate affidavit and just put that information on there.
So, what's the difference between an estate? Because, like, if you're a celebrity, they always talk about the estate, like the Michael Jackson estate, the James Brown
James
estate.
Brown.
So every
James Brown said this on, I think it was the Johnny Carson show or whatever. And he said he never puts his money in the bank, he bury it somewhere in the forest, which they're still trying to find to this day. No lie.
Mhm.
But
I'm about to look for it now that you said it. What is money at, James?
Ow.
now, my question is, when someone, like, they found
Mhm.
the actual will recently, you know how long Aretha Franklin estate
Mhm.
was going on, and her wishes was in between the couch
The
cushion.
couch. That's yeah. Okay.
Here's my question. My question is, what is an estate, and how can people get their wishes without, like, I don't want to transfer my debt
Mhm.
to a loved one. I don't. I know I owe them, those stingy crumb snatchers.
So, um, like I was saying, how you when whenever any everyone has an estate when they pass away. So when you die, it's automatically the estate of. So that's probate law 101. You pass, it's everything that you have is in your state. That's your state. So what keeps you from not going to probate is to have an estate plan. And in your estate plan, you have your trust and other things that you want, dual power of attorney in case if anything happens to you. Um, this is who I want to be my representative, who to talk for me, who to care for me if I have to go to the hospital and things of that nature. So you need someone that you trust. And that person should also be your successor trustee, because that person will be the one that is dictating what you said before you passed away. So everything that you put in your trust or your estate planning, that person will be the one that will be doing what you said that you wanted to be doing. They will be doing your wishes. So whatever you put in there, you can say you want to pay your successor trustee for doing this. You can do whatever you want to do because it's tailor made to you. And so that do that instead of just doing a will, and don't do anything general. Be intentional on everything that you want to do. And then if you want to disinherit people, you can also put that in there. So you can put anything you want in your estate planning.
I want to add something to
Go
that,
ahead.
and and I'm saying this for everybody that's in the back, right? So, and when I say in the back, I mean that those of you that are listening to this, the problem in the community when we have a funeral, there's a insurance policy that's out there, and it's set up with the insurance agent. And at that time, when you sit down, you're thinking about how much coverage that you need. Is it taken care of? And you might just put your son or daughter on there. Let's say you got four or five. You're not gonna put all four or five on there. You might put, you know what? I want to put this one individual that I believe that they're gonna do, the brother that's going or sister that's gonna do the right thing. And when that person passes away, oh, mom, dad left me this money, and now the siblings are fighting over. Oh man, that you should have passed it to. No, they left it to me, right now. At that moment, if you really think about it, when we have these, and I partner with a funeral home, I see this all the time in family. That's when fights, alter disagreements happen. So when she says be intentional with it, you may not be able to do that with that insurance policy. I have my children, but I have my oldest that's an adult. I can't put my youngest that's 11 and 15 on this policy because they're not old enough, but they're smart enough. I don't know when
But
my time is
don't
going to
I
come.
mean, I thought you can put whoever you want on an insurance policy.
Yeah, but if you put a minor on there, you think that the insurance company is going to give a minor money? No. And then in the state of Illinois, you can only give $10,000, and then you have to open up a probate for that, a guardianship. So it's all type of probate laws and rules. So I would, if you did, you definitely put an adult on there, but then you'll still need to do something to do something with the guardianship of that child. And that's why I say, and I'm gonna piggyback off of what you said, but I want to also answer the question that you asked earlier, which is how you don't pay any debt because you don't want to give the debtors any money. You want your money to go to your loved ones. You asked that question. So, and that's what I was saying about don't put anything in your name, put it in the name of the trust, because if everything is in the name of the trust, you don't have to pay any debtors back. Because when you filled out information for your lights, gas, credit cards, that's in your name and in your social security name, it's not in the name of your trust. So I own my own home, so my home is not in my name, it's in the name of my trust. So if I went outside right now and I had an accident, it was my fault, and then the insurance company tried to sue me because I didn't have any insurance. The other person's insurance company tried to sue me because I didn't have any insurance. They're looking for Jamica Davis with my social security number. They're not looking for my trust information. They don't know who owns my home because it's in the name of the trust. It's no one's name. And
S-
my trust didn't hit them. I hit them. So I'm not, if I passed away when I hit them, I wouldn't owe them anything.
What about natural disasters when it comes down to flooding, robberies, or anything in your home and it's in your trust? How can your insurance pay you and if something happens in your home?
So usually like for my homeowner's insurance, it's in my name. My mortgage is in my name, but my deed is in the name of my trust. So those are all different things.
Let's say, for example, you haven't fully paid your mortgage. Can anybody that listen to intellectual radio say, hey, mortgage company, I want to transfer it to a trust? Can you do that?
Yes. So if your mortgage company allows you to do that, then go ahead. I wouldn't advise it or recommend it
Why?
because you already own your home. But you have a when with your mortgage company, that's a promissory note, promising that you're going to pay this debt. So it's a debt. When you purchase your home, you're going to get your deed right then and there, and then your deed is recorded. So you can do whatever it is you want to do with your deed. Any information, like with mine. At first, when I purchased my home, my mortgage company said, no, you cannot put your mortgage in the name of a trust. So, okay, well, put my name on my deed, and then I just did a deed in trust, and then my trust name is on my deed. And then with my mortgage company and my homeowner's insurance, it has my name on it. So it's separate. All of the mortgage and the your deed is totally two different things.
And your
It's
company
not
does
like
that.
yes,
It,
it's
it,
not
it will help people to separate whatever.
correct. Yes, we do everything for our clients. So a deed, and when you buy your home, it's not the same as you buy your car. So when you purchase your car, you have a lien holder, and your lien holder has your title. And so until you pay off your car note, then you get your title. That's not the same with the home. With the home, you get your deed when you signed your documents at the closing table.
Insurance is expected to go up again and again and again because of the word inflation. You know, Mayor Mohawk is about to do property taxes, that's going to go up. And eventually, they say the interest rates are down, The list goes on and on. This is a perfect time to get some property on a vacant lot. And you say what?
Ooh, that's a good question.
Well, what kind of insurance? So you, because
Yes.
you're speaking of insurance. So and this is a good time for sellers to sell their home, but buyers, it's not a buyer's market at this point because everything is inflated, as you said. But homeowners insurance, I mean, it's homeowners insurance is built into your mortgage payment, so it's not really that high. So it would actually depend on the taxes or property taxes wherever you
But what if you can
purchase your home.
get your
Because with
insurance separate from your
so
mortgage?
usually they'll do like a PMI for a couple of years and then they'll take that off. But the only time that I know of, well, you can, so this is what I'm saying. So, yes, you definitely can get your homeowner's insurance from whoever you want to get it from. But then they'll say, "Hey, do you owe a mortgage?" And then you say yes. So they'll put it within your mortgage. But if you don't, then you'll pay what, yearly or every quarterly or something like that. And you can pay that. Like my homeowner's insurance is like $1,200, so I just put it with my escrow and my mortgage payment.
What advice would you give a homeowner who owns a home and don't know what to put on their insurance? We had a flood, we have tornadoes, we have natural disasters, we have fires. We You're in Chicago. What would you recommend if somebody comes to you and say, "I'm fresh, I'm new, I need some good insurance because the insurance I had, I don't want anymore."
I'll let you. You want to
Yeah,
take that one
yeah, I'll
now?
take
I'm
that
going to
one.
come. I'm going
Okay.
to come from the life
Sure.
insurance side,
Okay.
but I'll let you take that
So
one.
with the
Okay.
homeowners insurance, so there's a list of questions, just like how you familiar with auto insurance, right? So with homeowners insurance, they ask you the same thing, all the structures of your home. They can also go to the Cook County Assessor's Office or the Treasurer's Office and look at all the information of the home, when it was built, all of that, how it looks, everything. So nothing's a secret. And there's also a program that us licensed insurance agents use that also tells you about the structure and if there was any type of damage to the home. So it tells us all of that. And then you have the choice to, okay, if this is a flood zone area that you live in, you can take the flood insurance or you can not take the flood insurance. Homeowners insurance and renters insurance is cheap. So I would recommend, because the goal is you want to be restored back to your original whatever that happened. If somebody came into your home and vandalized it, stole from you, if you had a fire in your home, you want your structure of your building to be built the same way, that or better, with stuff, because my
Closest you
yeah,
could be.
close as you can be, something similar. And so you want.
Instead of like a FEMA or something like that, let's say you have a natural disaster,
Mhm,
claims,
mhm,
they don't want so many claims in the state of Illinois or whatever. You only can make so many claims.
mhm,
And let's say, for example, you just had a fire.
mhm,
Mother Nature decides to have a tree hit your roof. Let's say Mother Nature plays tricks on you again and lightning hits your home.
mhm.
You saying it's not me,
Mhm.
but the insurance company drops you. The question is, why, if you know it's not intentional, why insurance companies dropping people?
The risk. So everything boils down to risk, and it's
Location,
the location and the
location,
risk.
risk.
And so they'll drop you. Another company may or may not pick you up, and but if all else fails, you can get any type of insurance from anybody. your mortgage company will definitely go ahead and put that insurance on you, and it's going to be double. So, um, that's why you have to really, like, if something minute happened to your home and you can pay for it, just go ahead and pay for it. Don't
But that's not fair.
it's not fair. However, if you don't want to be dropped and still have your low cost, then just pay for it. Like, for instance, my
But
daughter
people don't
flew
have
off.
it like that. We're not
It's
we're
you
not Jamaica.
no.
We're not.
It's
We don't
so,
have
but
45
you do.
jobs.
So no, I understand that. However, if you own your home, there's plenty of ways that and have a job. You can get a small loan. You can work
You
towards it or
forget who you're
save.
talking to. You forget what radio station you're on.
I understand it, but if something costs $300 to get fixed and you want to do a claim, I would not do a claim for three hundred
I'm
dollars.
not talking about the 300.
Uh huh.
I'm talking about what happened in the Austin community with the flood.
Okay.
I am talking about when the tornado that hit.
Mhm. Mhm.
You're looking at back-to-back years now.
Mhm.
And then lightning hits your home, or a tree hits your home, messed up the central area. You don't have 6,000 or $7,000 lying around, and you can't go to Bank America or Chase and say, please, baby, please.
Right, you go
Yeah.
to FEMA and say, "Please, baby, please," and FEMA will definitely do it. You just tell them you don't have any insurance. They will come out and they will inspect and give you the money. I'm a
But
witness.
that's not what they're telling people, though. They're
No,
telling people to do a claim.
no. You contact FEMA and you do not have homeowners insurance or renters insurance, they will accept you. But you cannot have the homeowners insurance or renters insurance. If you do, then they will reject you. But if you
But
do
why
not,
is that, though?
because your insurance company, you're already paying for something, so use that. And FEMA's for people that are less fortunate.
Let's talk about life insurance.
Well, look,
Mm.
to that, I'm about to be a first time homeowner. I close at the end of the month, and to your point, I was renters insurance and say, hey, when you get the when you before you move, hold that renters insurance as long as you can, and if anything breaks or whatever,
Hmm.
use that, and then switch over to your homeowners. I didn't know I'm going to have both. And also, what I did not know, I'm just sharing this, although I am not a PNC agent, because there's different type of
Hmm.
What
insurance
is the
agents.
PNT agent?
PNC agent is one that
Property and
does
casualty,
property and
auto
casualty.
and home.
Auto and home, works with the contractors, all of those things. Um, and with that being said, is just someone actually had to sit down with me and explain. I said, well, I want to know the price. Think about sometimes we do some slick stuff with I'll record it. Y'all listening to me, right? So, hey, let me drop this premium or deductible so I can get this windshield fixed or whatever. So we're talking about a home. That's a lot. So I need to know, how is this roof covered? Are these windows covered? Or how does this work? The deductible, keep the deductible high, or want to keep it low. So there's a lot of things where you really have to sit down and ask the right questions. But I'll say it like this, because I'm who I am. If you're trying to get it for the low, you're not going to get everything that you want. Sometimes you have to pay for what you want, but also too as well, in this world that we live in, especially Illinois being the toughest state. This is coming from me, one of the toughest states when it comes to anything. Um, there's going to be some. Um, I don't want to say some money made, but insurance is one of those where they want you to pay into it for a period of time. If you just got into something brand new,
I'm,
guess what
I'm,
happens?
I'm going to give you a scenario.
Yep.
You pay for your insurance for 5 years. You're 5 years into it, right? 5 years. Something happens. Insurance basically says no. Why?
Has that ever actually happened? Because if something happened and it's covered in your insurance policy, it's supposed to be paid out if you pay your deductible. And usually they'll, like for instance, my house got broken in one time, and thank God they didn't steal none of my stuff, but they stole all of my son's stuff. So that let me know that it was one of his friends. So my deductible was $500. So I put everything that was missing, and took pictures and all that stuff. So what they did was they just deducted it from what they were going to owe me. So you really don't have to pay the insurance deductible. They will just take it out of the money that they're going to pay to you. So if it's covered and you know that it's covered, they usually will pay. However, if you start deducting stuff off, like because you can't just afford it, or you trying not to, okay, I just want this amount of money, because the purpose of homeowners insurance and renters insurance to me is you want to be made whole when something happens. You don't want to be caught, I ain't gonna say that part, but you don't want to be caught not having it, like that your roof needs to really be covered under homeowners insurance, but you're not going to do it because you can find somebody down the street to do it. Why would you want to do that? Scapegoat. You should just go ahead and pay that extra so that you won't have to be worried about you going to find somebody, and just go ahead and do it. And then if something
I'm
does
not going to
happen,
put
you're
my
going to,
my trust into Pluki and Ray Ray down the street.
yeah.
That's
Right,
one.
right, right.
Number two,
But
it
people do that. So I people say I'm going down here and get some Hispanics to do this and do that, and it happens.
But I'm gonna do a name drop right here. Someone that's also a mentor for me too as well, and West Lawndale, which is Miss Antoinette Rogers. Right. So I've sat with her, especially those that have auto. You've been in accidents that's maybe not even been your fault. And I didn't know that those are things that you can have cleaned up. You can have things removed. And definitely at the address that you live, some of those vehicles need to be removed
Yes.
off your. There might be a vehicle at the address that you did not even know existed. That may have been from the old person. So when it comes down to
but how you find that out?
you have to sit with that licensed agent. If you're just doing a quote online, we use our phone so much, and we lost touch with sitting with an actual person that can help you with these things. I'm only telling you this because someone sat with me and explained it, and actually let me see the screen. You can actually meet with these individuals. I'm not saying myself. That's why I dropped the name from Miss Antoinette Rogers that could show you those type of things, and ensure that they can clean up that record. Right? I had a vehicle accident on my record. She showed me, okay, this is how we clean it up. Okay, I didn't even know that exists. There's processes that exist with seasoned brokers that can help you get through those tough things that'll reduce those deductibles and things in the past and things that are in the background that
So
we
be
just
more
don't know about.
specific, like what?
Okay. Um
If you
you
have
had
an
a
example, I got
you
one.
had a she I was provided an example of a person that had a accident 5 years ago, and but that person was not at fault. But when it looks at the record, when I pull up your vehicle, I want to just do a quote on that Mercedes Benz that you have. Making fun of her because she got the Mercedes Benz, right? I want one, right? But then we're not just looking at that. We're looking at oh, I see that you have an accident here. There's nothing that shows that it was your fault or their fault. We just know that there was an accident that needs to be cleaned up. Somebody needs to do some maintenance on your file. Now that's the best that I can explain it to the
Mm-hmm.
best of my ability. Unless you want to elaborate on that.
Yeah, I can elaborate. And to piggyback off what he said, do not be afraid to ask your insurance brokers, agents to go into your file and actually print you out something, a itemized statement detailed of my driving, my history, my accident reports, all of that, and then you can say just like with your credit report. Now, this you disputed. This needs to be taken off. That needs to be taken off. You can do that with your insurance policies. Everything. Tell them, nah, this needs to be taken off because this didn't
So
happen
you're
or this
saying
did.
homeowner insurance, you can do that?
Yes, if something did not, people make mistakes all the time. So say that
Car
did not happen.
insurance, you can do that.
Definitely. So
Homeowner insurance, car
yes,
insurance.
you can
Okay.
definitely do it.
What about
Ask.
life insurance?
I got that.
Go ahead. What was you
There's
saying?
something called the Medical Information Bureau. You can
Mhm.
go to MIB.com. It's a nonprofit across the board. All companies look at this. I'll give you an example for myself, right? To disclose. So I've have just about X amount number of insurance policies. Don't come looking for me. But I had some that have been declined, right? I have some
Insurance companies decline.
yeah, I'm not I am the sexiest person that you can find. I know I can't say that I heard, but I am in good health for my age, right? 5 years ago I was even better health, but now I've had some things happen where I can't me being in my military. So in my military background, right, some things they will not I'm a risk to them, right? So with that, those declines are like I want to use this phrase, a credit report. They can see every company that's accepted me, every place that I've applied for, and every place that's declined me too as well. So if you've been declined 5 times and you were the company, would you look into this person? Is this a risk that you're looking to take? Because the biggest thing we'll get into is this is about building wealth. A lot of and the Legacy Smart Group, we definitely want to change the myth. Do not focus on just the death part of it. It's about the wealth and living part. The companies want you to pay into these policies for a period of time as long as you can to build that wealth. Every dollar that you put in is that every dollar that you make is about 20, $30 that they make on the end. Hundreds of dollars. I'm understating. You know,
The insurance business is a
the
billion dollar
insurance business.
business.
Let me and I thought about this over the weekend, and I want to say this, and I want to get in this conversation and get out of it. And we if we went back to slavery days, right? And like I said, I don't want to stay in this one. In the slavery days, some of the companies that we have now covered slaves at that time, right? And it wasn't about okay, if I if if I take this slave's life, I'm gonna get paid, right? There was a point that it came to where, hey, we can't, we're losing too much money. You're not gonna harm our people, right? And then we're gonna pay you. We need them to be healthy. We need them to live, and then that's the way that you're gonna get that check. And then guess what? It turned into okay, if I have Cedrick is my strong slave, how healthy is it? Let's do his check. Oh no, he's got this disease, this one and this one. We're not going to take that risk. But our I don't mean to say that to offend anybody, but we have Miss Jamica here is in perfect health. We're going to cover her and we're going to give you as much as we can. How much are you willing to pay? I want I can afford to pay this much and we'll give you 500,000, right? Now, if something happens to her, we may not pay that policy. But we want you to pay into this policy for a period of time. And guess what? That entire time that Jamica's living, we're building wealth.
I'm glad you mentioned that because this been going on in
I was like, man, I
it,
don't know what this is gonna go.
it's been going on in our community for quite some time, and I'm going to flip it, and I want you to answer it. you know that teacher that cares, that really cares about the youth.
Mhm.
You know that entertainer, that white manager that knocks on the door, says he really cares about your son, your daughter. You know, she's going to be the next sexy red. He's going to be the next whatever rapper. Ask the parent to put an insurance policy on them.
Mm.
Now, recent developments happen that P. Diddy had an insurance policy on Biggie Smalls.
Mhm. Mhm.
You're smiling,
No,
so you know where I'm going.
Mhm.
I know where you're going. I think I know where you're going, but is this a deep conversation?
Can anyone just sit there and say, I want to put a life insurance policy on Jamica?
There's something called insurable need. So you
Mhm.
just can't, I can't.
But if I don't know any better,
So how he got to do that was because there's a such thing as business insurance. So he went the business insurance route. Because if something happened to Biggie, that's his moneymaker. So therefore, he can get insurance on him. And if you had a business partner, like is Cedrick and I were business partner, if something happened to me or I got disabled, he can get insurance on me so that the insurance company can give him money because I can't perform my duties. And there's also a such thing as if you had a like an administrative assistant or executive assistant, that is one of your main personnel people. You can get insurance on them as well
It's called
because
key person.
key person, yeah, key
Key
person
person.
insurance. And if that lady goes out on maternity leave and stuff like that, or gets sick, FMLA, it's an insurance policy that will give you money to go out and get a temporary person until that layperson comes back in.
If you another one I'll add. So I met a gentleman. He said, "Hey, I wrote the policy for LeBron James." What? Okay. Guess what? Who owns that policy? It's not LeBron. It's Nike. Nike owns that policy. He's there. He's going to be the one making that money. They're going to make money off of. I gotta watch certain words, right? But it's truth. You look it up. Um, the key person. This person's going to make this money. If anything happens to them, either we need enough money to replace that person, go out and get somebody else, or we're going to benefit from that. You're looking at all the athletes now. You're
Mhm.
looking at if we
so you're saying Bill Belichick can, because he says, I like him. I like him. I want
we can
insurance.
we can say let's go bigger. The New England Patriots. Okay, well, the New England Patriots, or let's go to the brand. We have our the fame. Who's the most famous Chicago woman basketball player right now, which is Angel Reese. Well, but she's with Reebok, right? So is she beneficial to Reebok's growth? Looking at that, we here in Chicago, we love shoes,
Mhm.
right? Guess what? She's beneficial to Reebok right now.
Mhm.
Let's insure her. Let's put a policy on her, right? Not saying that that's happening, but if you think about it, this is it's business. We can put a policy on her. She's that valuable. She's changing the game along with other great women in the industry. But that's basically what that is. Guess what? For iHeartRadio, if you for this station, you're beneficial to this radio station. We have insurable interest in you. So guess what? Either if you want to leave, I can use that policy to give you a bonus to see if I can get you to stay. But if you choose to leave, at least I made money. I paid into it over a period of time. I built some cash. And guess what? I found Roman 2.0, although there's no other Roman, right?
And not
The,
on,
Earl
no,
begs to differ, though.
not only that,
But
Jennifer Lopez. So you know the famous people also get insurance policies on their body parts. So Jennifer Lopez, she says that her buttocks makes her money, so she has an insurance policy, and she did that way back in the day when she had the Jenny from the Block days.
yeah,
So
you
yeah, so
gotta.
whatever is an asset that you are making money on, you can
Uh,
get insurance.
no,
let's put it this way.
mm-hmm.
Okay. Um, because we're almost running out of
Can I
time.
say this real quick?
Go ahead.
Uh, Insurance policy is an asset. It's not a liability.
Mhm.
Most people um don't most people stop paying on an insurance policy, which is the wrong answer because they were uneducated. Right? That term policy that you thought was going to end, you didn't even know that you could do something called a viatical settlement where you could have sold that policy to a bank and got more than what you paid into it.
Let's say
Not saying that you should do that, but
let's say right now, for people who are listening on intellectualradio.com slash iHeart radio station, let's say your company, you deal with life insurance. What type of life insurance a person needs right now? Because we're killing each other. And a lot of people are using GoFundMe for that mother, for that grandmother that's out there. What a person needs, especially if you know they out there like that or she's out there like that. What do they need specifically? Because a lot of people say get insurance. What kind of insurance? Once you name the insurance, they don't know. So what do they need?
so everything varies. So the first thing that I would tell anyone, the most cost effective one is just a simple term policy, but there's a but here. It must be convertible. So we got a lot of individuals, companies in the Chicagoland area, everywhere. They'll sell you a policy. The one that you get that nice little letter in the mail from your bank. Hey, buy this for of $2. Or you may have one from your job. When you leave a job, you can't take that with you. So you got to get your own private term policy that is convertible, but it has to be enough to cover the failures people get coverage and don't get enough, right? So when you
Such as
such as okay, well, you pass away, but you left enough money just for 1 year. Your child that may be 8 9 years old, you need them to cover to the at least for 10 years, right? So you need to term policy is the most cost effective, but that's you want, and it's going to give you the most money for the least amount of a premium month. Then I'm going to give you an umbrella. It's called a permanent policy. Under the umbrella, you want one. We just talked about homes, right? You want one called for the title is mortgage protection. You pass away, it'll cover you. We want it to cover that house. That'll last you to age 100, or we can have that. Most people don't know that the policy will refund you and give you 100% of everything that you paid into that policy. I have that, right? I call it a
Return the premium.
savings, a return of premium or refund of premium. The next one is um the part of the permanent umbrella. Everybody gets into a whole life or a universal life or IUL. Now, if you I'll say this for all my ballers that's out there driving. You're paying that premium on that car note that you're riding in right now. You could be putting that money into the insurance policy and taking it out to pay that car note. That car won't be here 3 4 of it, probably you leased it for 6 years, but that policy will, and that policy was growing. Don't do it backwards and put your money into the bank and then pay somebody and make nothing. You make nothing from the bank, 3 cents, right? So you have all of those. So a term policy and a permanent policy.
And then we also have the AFL. So
Oh, we do something unique. Uh, our businesses, we do something called Assure for Life. This is something that most people haven't heard about. It covers 7 people for $85. Most of the time, a lot of us travel, and let's say you have someone in family in Tennessee, but they need to get back. They pass away in Tennessee, but they want to be buried here in Illinois, right? Chicago specifically. You got the money that you put the money up to pay for that shipping. So the funeral plan doesn't you don't have to you just can't have terminal illness, dialysis, cancer. One more other thing, it kind of slipped my mind, but there's no questions. There's no asking for your social. That is a plan. That is not insurance. But what I noticed in we talked about the rise of inflation. We have to have something because GoFundMe, you're not going to get 100% of what you made, what people donated.
Very quickly, please tell intellectualradio.com/iHeart radio station how they can get a hold of you.
You can call me at 708-740-4383. And I also have an office at 1515 North Harlem Avenue in Oak Park, Illinois.
Cedrick Harding. You can look up LegacySmartGroup.com. And also my number is 224-407-4888. I'm text friendly, so I'll be waiting on you.
Well, that's going to do it for us on this Monday evening. Thanks to Earl Winfrey, our executive producer, Wanda, who is behind the scenes. Also, don't forget, Monday is our Christmas party. So we will be here at 4 p.m. You know, me dancing and all that stuff, and Earl with the Christmas sweater on. So stay tuned, 4 p.m. until 6. We'll have a happy holiday. And we got a special surprise for you guys, too. Have a good one, everyone.